Hey everyone, and welcome. If the stock market has always seemed a little complicated or maybe even intimidating, you are in exactly the right place. Over the next few minutes, we're going to break down the basics, cut through the jargon, and get you started on your journey. So let's dive right in. So, let me just ask you something. Have you ever seen a massive company, like Reliance or Tata, and just thought to yourself, wow, what would it be like to own even a tiny piece of that? Well, guess what? That's not just a daydream. That's exactly what the stock market lets you do. All right, first things first. What is a stock? It's a word you hear all the time, and it might sound super technical, but trust me, the idea behind it is way simpler than you think. And honestly, the best way to think about it is, well, pizza. Imagine a giant company is one huge pizza. When you buy a stock or a share, you're literally just buying one slice of that pizza. That's it. You become a part owner of the whole company. It really is that simple. Okay, so you've got your slice of pizza. How does that actually make you money? Well, there are two main ways. The first is something called dividends. If the company, the pizza shop, does really well and makes a lot of profit, they might decide to share some of that profit with all the slice owners. It's kind of like a little thank you bonus. The second way is through growth. If the company gets more popular and successful, your slice of the pizza becomes more valuable. So you could sell it later for a higher price than what you originally paid for it. But, and this is a huge but, you have to remember this one thing. The stock market is not a savings account. It's a roller coaster. Yeah, there are thrilling highs, but there can be some pretty scary drops too. The value of your slice can go down just as easily as it can go up. Okay, so we've got the what. We know a stock is a slice of a company. But where do you actually buy and sell these slices? That brings us right into our next section, how this whole thing actually works. The journey of a stock from a company's boardroom to your phone screen is pretty cool. It starts with an IPO, or initial public offering. That's when a private company decides to go public and sells its first ever slices to raise money. Then, those slices, or shares, get listed on a stock exchange, which is basically a giant digital marketplace. And finally, there's you. You use a broker, which is usually just an app on your phone, to buy and sell those shares with other people. Now, here in India, there are three key players you've got to know. First, you've got the exchanges, like the BSE and the NSE. These are the big marketplaces where all the action happens. Then, there are the brokers, companies like Zerodha or Grow. They're your gateway. They give you the tools to actually access those marketplaces. And finally, watching over everything, you have SEBI. Think of SEBI as the referee, making sure the game is played fairly for everyone involved. You are going to hear these two terms thrown around all the time, bull and bear. A bull market is when everything's optimistic and prices are charging upwards like a bull's horns. A bear market is the total opposite. People are feeling cautious and prices are swiping downwards like a bear's paw. It's really just a simple way to talk about the overall mood of the market. And this is such a great way to think about it. Approaching the market is a lot like playing a video game. You level up, you get stronger, and you make better moves by doing your research and understanding the game. But if you panic and just start mashing buttons out of fear, well, that's when you start losing points fast. All right, theory's great, but let's get practical. How do you actually get your foot in the door? This next section is all about that, your guide to taking that very first step.
Okay, before we go a single step further, this is a big one. It's non-negotiable. If you're under 18 in India, you cannot open a trading account by yourself. A parent or guardian has to open it for you as a minor account. The best way to think about this is as a learning journey you take on together, with their guidance.
So here it is, your 4-step starter plan. Now just notice what's at the very top of that list. Step 1 is learn. Education comes before anything else. Then, with your parents' help, you open an account. And here's the crucial part. You start with a very small amount of money. I'm talking an amount you would be completely okay with if you lost every single bit of it. Only after all that do you even begin to research your first potential investment. And the best part? Learning has never been easier or more accessible. There are incredible free resources out there, like Zerodhaversity, which is basically a full-blown financial university for free. You've got YouTube channels, articles, and classic books that can build your knowledge from the ground up without costing you a single rupee. Now, when it's time to choose a broker, you've basically got two main choices. On one hand, you have discount brokers. Honestly, for beginners, these are fantastic. They have super low fees and really easy-to-use apps. On the other hand, you have brokers that are part of big banks. They work fine, but they tend to be a little more expensive and sometimes a bit clunky to use. For most people just starting out, a discount broker is probably the way to go.
This right here is one of the most powerful ideas in all of investing. Look, nobody can perfectly predict the future. Don't try to be a genius who buys at the absolute bottom and sells at the absolute top. Even the pros can't do that consistently. The real magic happens when you start early and just stay invested for a long, long time. It's about time in the market, letting your money work for you year after year.
And that brings us to our final and maybe most important section, playing it smart. Knowing these rules is what separates a thoughtful investor from just a gambler. Think of these as the golden rules of the game. First, diversify. Don't bet everything on one company. Spread it out. Second, please avoid those hot tips from a friend or some random person online. Do your own homework. Third, and this is a tough one, learn to control your emotions. Fear and greed will wreck your strategy. Always remember to start small with money you can afford to lose. And hey, you might even want to try paper trading first. It lets you practice with fake money to get the hang of it, totally risk-free.
And here's a little something that actually rewards that patient long-term thinking here in India. If you hold on to an investment for more than a year, the first 1 lakh rupees you make in profit is completely tax-free. It's a pretty powerful incentive to not just jump in and out of the market.
It's so easy to see stories online and get caught up in the hype. So let's end this section with a little wisdom. One of the greatest investors of all time, Warren Buffett, started young, but he played the long game. The real goal here isn't to get rich quick. It's to get rich slowly, patiently building your wealth over time. So there you have it. We've covered what a stock is, how the whole market works, and the key rules to get you started safely. Your journey doesn't begin with putting money in, it begins with putting time into learning. And that brings us to the final question for you. Now that you've got the basics down, what's the very first company you're curious to learn more about? The answer to that? Well, that's where your real journey begins.